The chief market strategist at Corpay says that a weaker loonie could push higher prices for everything from groceries to Amazon products as well as vacations. Karl Schamotta made the remark after the Canadian dollar traded at its lowest level in decades on the eve of the sweeping U.S. tariffs. The loonie did rebound after the announcement of the pause, but with the clock ticking for negotiations, Mr. Schamotta joined us to explain what could happen next.
The basic issue is that this would lead to a prolonged and extremely severe shock to the Canadian economy. So the Canadian dollar would very likely fall relative to the U.S. Perhaps another 2 to 3% at least in the initial stages after an announcement is made. So yeah, currency traders are going to take a very, very negative view on Canada if this does indeed transpire. Partially, you could see some positive offsets. So, as the Canadian dollar falls, that helps to support export sectors. Many of whom have struggled for the last couple of decades due to an overvalued Canadian dollar. This might provide a little bit of relief, but on the other side, and on the more significant side, a weaker Canadian dollar will firstly represent, the negative impact that is being felt across the Canadian economy. It'll raise the cost of imports. So, for example, products that are brought in from the U.S. or any products that are denominated in U.S. dollars but imported from elsewhere in the world could go up in price quite substantially, in addition to the tariffs that are being applied. And overall, that might drive up inflation in the Canadian economy and put the Bank of Canada in a very, very difficult spot. Lots of manufactured products are produced for final assembly, at least in the U.S. And then even goods that are made in China are technically, numerated in renminbi, but they're priced for the U.S. market. And so as the Canadian dollar falls relative to the U.S. dollar, they become more expensive. So basically anything that you're buying on Amazon becomes more expensive. Fruits and vegetables that are being imported from, southern parts of the U.S. are becoming more expensive. And, even machinery, heavy industrial products that are, manufactured in some areas of the U.S., those become more expensive for Canadians. And then, of course, you've got things like vacations. If you are a Canadian citizen and you're going abroad, you're going to, a southern U.S. state, for example, that becomes far, far more expensive almost immediately after tariffs are passed.